Hello, in this video you will learn what is the best credit score to get a home loan. Okay, let's get started. Strong credit scores are essential to qualify for the best mortgage rates. To qualify for the best Canadian mortgage rates in 2021, you must have a credit score of 680 and above. While some mortgage providers will allow you to qualify with credit scores of 600 to 680, others may charge higher interest rates. Do you want to check your credit score before you apply for a mortgage? Apply for mortgages with confidence and get your free credit score. Borrowell allows you to quickly compare the mortgage options that are most likely to be available to you. How can I get the best mortgage rates with my credit score? Here's a quick overview of how lenders and mortgage brokers view your credit score. Higher credit scores can lead to better rates. 741 or more, wow! Your credit score is outstanding. These are the best mortgage rates. 713 to 740, your credit score is good. A good rate of interest should be offered on your mortgage. You also have many options. Lenders consider this a fair credit score. Once you reach 660, your credit score will be considered average. Banks and lenders consider this a low credit score of 575 to 659. A lower credit score than 640 might make it difficult to get a conventional mortgage from a bank, online lender, or other financial institution. Before applying for a mortgage, you should work on improving your credit score. 300 to 574, your credit score needs improvement, but it's okay. You'd be considered a high-risk borrower. You would pay extremely high interest rates even if your mortgage application is approved. To get better mortgage rates, you should work to improve your credit score. You'll likely notice small changes in your interest rate for every 20 points that your credit score falls. Lenders adjust their interest rates when your credit score changes by 20 points. What are the best ways to get a mortgage for someone with bad credit? Bad credit can make it difficult to obtain a mortgage. Although you may have other options, the interest rates that you will be eligible for are not cheap. There are steps you can take to obtain a mortgage without bad credit if you don't want to delay buying a home. If you are willing to wait, it is worth taking the time to improve your credit and get better mortgage options. These are some ways that you can get a mortgage even if your credit is not perfect. A larger down payment is possible. There are ways that you can show lenders your financial stability if your credit score is not great. A large down payment of 20% or more gives you greater leverage with lenders. This shows you have a substantial income and your ability to budget. This will help you to reduce your monthly mortgage payments and make them easier in the long term. A larger down payment can make you more attractive to mortgage lenders. You can also use an alternative mortgage lender. You will not be approved by the major banks if your credit score is below 600. It is more likely that you will need to find another lender. Alternative lenders can be more flexible when it comes to credit. You will need to pay a larger down payment, usually between 20% and 35%. Alternative mortgage lenders tend to have higher interest rates. Alternate lenders might charge fees that are higher than traditional lenders. An alternative lender may charge a loan processing fee equal to 1% of the mortgage value. A broker who specializes in mortgage brokers might charge you a 1% finder's fee if you have found an alternative lender. The additional fees of 2% can add up to a significant cost. For example, a $300,000 mortgage would cost $6,000. A cosigner is needed or a joint mortgage. A cosigner is someone who can help you get a mortgage without having to increase your down payment or work with other lenders. If you are unable to pay your mortgage, a cosigner will make it happen. Co-signing with a cosigner can make it easier to get a traditional mortgage lender's loan because the income and credit of the cosigner are used for qualification purposes. You should choose someone with good credit and good income who is willing to co-sign for you. Credit score improvement. You should work to improve your credit score if you don't want to rush to buy a home. You can achieve this by paying your bills in time, not using more than 30% of your credit limit, not closing existing credit accounts, and applying for credit only when you need it. Your credit score will improve if you follow these steps consistently. Here are some steps to help you build a credit history if you have zero credit. Credit scores and mortgage default insurance. Credit scores also impact your ability to obtain mortgage default insurance. This is required if you have a down payment of less than 20%. Mortgage default insurance protects your lender. Private insurers do not require strict credit scores for mortgages. Although these mortgages might have higher interest rates than conventional ones, you may still be eligible if your credit score is below 680 or 600. How can I improve my credit score? This is a detailed list of steps that you can take to improve credit and get better mortgage rates in the future. 1. Monitor your credit score regularly and check your credit score. Your financial health can be improved by checking your credit score. Borrowell can be used to free check your credit score. A good credit score can help you get better products and lower interest rates. Data shows that improving your credit score can actually be beneficial. 2. Be aware of your credit utilization. You are more important than you think about how much credit you have. We often accumulate credit card balances and don't realize the potential damage it can cause. Credit utilization refers to the ratio between your credit card balance and your credit limit, as shown on your credit report. Your credit limit should not exceed 30%. If you have a total credit limit of $10,000, your total balance should not exceed $3,000. 3. You must pay your bills on time. Your credit score is 35% dependent on your ability to pay your bills on time. This is the biggest factor that affects your credit score. It's crucial that you pay your bills on time. Your credit score will be negatively affected if you miss or pay late. Even one missed payment can reduce your score by as much as 150 points. To ensure you don't miss any bill payments, bill tracking software is available for free. Pre-authorized payments can be set up for bills that are frequently reported to credit bureaus. These bills can include student loans, mortgages, car loans, and credit cards, as well as utilities, premiums, insurance, and cell phone bills. What else does a mortgage lender look at, besides credit scores? While credit score is the most important factor lenders consider when approving you for a mortgage loan, it's not the only one. When approving your mortgage application, other factors are taken into consideration by mortgage lenders. Your income. Your employment, salaried or hourly wage, self-employed or salaried. Your payment history. Your financial history. What amount do you wish to borrow? The property itself. The mortgage lenders won't allow you to have any consumer proposals or bankruptcies in the past 24 months. They don't want 60-day late payments on your credit report in the past 24 months. Mortgage lenders look at two key areas: your monthly living expenses for the new house and your existing debt. Other than mortgage payments, your monthly living expenses include property taxes, heating, condo fees. These are your current sources of debt. Payments by credit card, car loan payments, student loans payments, credit cards with open lines. The mortgage stress test will also be required. If you are offered a higher rate mortgage, the mortgage stress test will prove to the lender that your ability to afford higher mortgage payments. When deciding whether or not to approve your mortgage application, a mortgage lender will consider all these factors. Although you don't need to be perfect, it's possible to make the mortgage approval process much easier if your strengths are in any or all of these areas. Before you start looking at properties, it's a smart idea to have your mortgage broker pre-approve you. The mortgage broker can help you get pre-approved if you aren't eligible for the price you desire. This could include paying off debts or adding income through a cosigner. Find the right mortgage for you. You should now know how to improve your credit score to get the best rates on mortgages. How do you choose the right mortgage? There are many options when it comes to getting a mortgage. You can visit your bank to choose from the available options. A mortgage broker is also an option. A mortgage broker, a licensed professional who compares mortgage rates from different lenders for you, is available to help you find the best rate. Because they have access to multiple lenders, including major banks, credit unions, and alternative lenders, a mortgage broker can help you save time and effort. They can search for the best mortgage rates and compare lenders without being bound to choose from one lender. Borrowell allows you to compare and find the best mortgage rates for you based on your credit score. You can instantly access your credit report to see your chances of getting approved by lenders, regardless of whether you are a first-time buyer or looking for a refinance. The Mortgage Coach tool will analyze your credit and ask you a few questions to help you compare rates from more than 50 lenders. Borrowell can help you compare mortgage rates and assess your chances of approval without any credit checks. The bottom line: a credit score of 680 and above will give you the best chance at getting the lowest mortgage rates. If your credit score falls between 600 to 680, there may still be mortgage options for you. However, they might be at higher rates. We recommend that you take steps to improve your credit score even if you don't have the time or desire to buy a home right away. You can prepare yourself for the future by doing this. This will help you qualify for the best mortgage rates, make savings, and pay your mortgage off sooner. Strong credit scores are essential to qualify for the best mortgage rates. To qualify for the best mortgage rates, you must have a credit score of 680 and above. Some providers will allow you to qualify for a mortgage with credit scores of 600 to 680. However, these providers might charge higher interest rates. Click the link in the description to repair your credit fast.